Hello and welcome everybody to the Janus Friday Market Update. Today's November 27th and this is our Black Friday edition. My name is Thomas Holloway and I'm a portfolio manager.
My name is Justin Hahn, and I'm a macro research analyst.
Great, thanks for joining us, Justin, and once again to the viewers. I want to start off with the same question we always start off with, which was how was the week and what was new this week for you in the markets?
Yeah, so this week was quite quiet due to the US holiday and the market closures on Thursday and the half day today. We saw some economics coming out, such as the consumer sentiment as well as the housing data, but they were a bit weaker than expectations. And we also saw some weekly job numbers rise a bit higher than expectations due to the second wave fears and the ongoing second wave in many states. And overall, the stock market kept treading slightly higher with it sitting around the all-time highs.
Right. Wow, thanks for all that. That sounds like a lot for a quiet week. So yeah, speaking of some of the other analysis that we do, we love talking about our process. And part of that process is looking at stock selection in terms of style factors. So there's different ways to carve up the equity market. One of the ways we carve it up is we talk about value versus momentum and other things. What are you and the team seeing there, and what are we up to in the portfolio?
So this week we saw quite a big of a bounce in the value stocks on the vaccine news. So this month, some of the moves we have made are more of selling the COVID winners, such as mainly in the technology sector. And we started to switch more into the economic sensitive names in the industrials, financials, energy, and materials sector. Again, this was back on the vaccine news that we saw, a lot of positives there at the beginning of the month. In addition to more value names, we've also seen the Russell 2000 index, which is the small cap index, outperform significantly as well.
Yeah, it's true. It seems like a while ago now, but I guess only a few weeks ago we had the election, and then the first Pfizer vaccine announcement, and there's been several other announcements since then. That was really a turning point for some of the internal dynamics in the market. And that's exciting to hear. I think it's positive overall, and also really interesting to see that like the Janus investment team has been on top of it and making those changes accordingly. All right, well, here's a fun one. I mentioned it's the Black Friday edition today. What does that mean for us in the market? Are you already seeing any reports on how it's going, or?
We saw a lot of retailers start their sales a lot earlier and have extended it to more or less at the end of the month or even further along. There's been a lot of pent-up demand on the demand side from consumers as they haven't been spending on leisure and travel. And as a result, we've seen savings rates rise significantly, which usually doesn't happen during normal economic times. So many people are just ordering the necessities that they need, as well as the only big purchases we were seeing were just more work from home equipment.
Okay, it's so a continuation of the trend we've been talking about that, but it's kind of I guess a silver lining of the stay at home, don't travel, don't go to restaurants. People at least who do still have a job are actually, as you said, accumulating savings. I saw an exciting headline that they're referring to this as the savings bomb. And at some point, people are going to want to spend that money. I'm not sure if today's sales are the catalyst for that, or maybe we have to get closer to a reopening. But there's definitely some discretionary spending available when the time is right. I wanted to chat about the moves in the yield curve and bond market in general, like what's new there and what's going on in our portfolio.
So this week we saw a lot of the bond yields move upwards on the vaccine news, similarly to the value stocks and the small cap stocks that we've seen outperform due to anticipation of a stronger economy. We saw 10-year bond yields in the US almost touch 1% briefly, but that strength faded into the end of the month. However, it's still trending upwards overall. We also saw, in addition to this, the yield curve, which is the 10-year bond yields and the 2-year bond yield difference between those two, steepened during the period to about 0.7%. This is around 2018 levels, which is very positive for the markets. With all the positive news of the vaccine going into the rest of the year, we still continue to see more strength in the bond yields and see it going up, but albeit at a very slow trend, depending on how the vaccine plays out and how long it takes for the rest of the economy to open up.
Right. And just to tie that back to client portfolios?
Yeah, so in terms of client portfolios, due to the increase in yields, we have been overweight more of the spread products such as corporate bonds and other high yield products in our global macro bond fund, as well as being short duration during this time.
Great, perfect. Yeah, this time last year, we were talking about the inverted yield curve, and potentially that means that the yield curve is signaling a recession. It's kind of incredible, but of course we did get the recession, but for a very surprising and different reason. So anyway, yeah, definitely the yield curve is starting to bounce back up again. The short rates are staying where they are, and the long rates are starting to creep up a little bit. Okay, we've talked about stocks, we talked about bonds. One place to go where there's some real action this week is the commodity market. Can you put that in context and maybe talk about that outlook a little?
Yeah, so along with the bond yields and the value stocks, we also saw oil prices rise. This again is due to more positive sentiment regarding the economic recovery. In addition to this, some of this move could be also tied towards the Biden victory. This is because Trump has been very loose on oil regulations, but with Biden, he'll probably re-regulate the industry, which will be lower supply. Again, that will increase prices and more anticipation regarding that as well.
Yeah, supply is tighter means prices would go higher. So yeah, related to that, of course, is the other boom right now is alternative energy. Janice has been pretty active investing in that space, and I'll just go ahead and say it, that space is still on fire. Stocks are going up a lot, and the economics of that sector has suddenly become extremely competitive with more traditional sources. But I guess the question is, the traditional energy space is probably getting a tailwind from higher oil prices, but so is the alternative energy space. Do you see like a conflict there?
Not too much conflict per se. In terms of renewables, investors need to more think of this as a longer term play and a longer term investment. The cost of renewable energies are dropping almost exponentially, so it will be almost the lowest cost energy across the board for most parts of the world. Also on the demand side, it's also increasing quite significantly at a rapid rate from different things, from demands from different countries, as well as more money actually being flowed into there with more government programs aimed at targeting renewable resources and helping those industries out. And so over the last 22 years as well, investing in the TSX and S&P 500 without fossil fuels has outperformed the index actually with fossil fuels. So it's more of a longer term play and a longer term switch into the renewable space.
Yeah, great. That's good context. I mean, we do see headlines that we're at maybe peak oil consumption, peak oil demand. But you said something interesting there. We're not talking about peak energy demand. If we add in all the other sources of energy that we are now going to be consuming, it's certainly the case that global demand is nowhere near peaking and probably won't. Great. Well, that's all the questions for today. Thank you very much, everyone, for watching. Have a great weekend, and feel free to reach out to your portfolio manager if you have a question for next week's video or just to have a question on anything else. Thank you, and have a great day.
Thanks, everyone.